Well, happy Monday, everyone. Welcome to our Straddles and Strangles webcast. I'm Connie Hill. Happy you joined me here today. You know, this is a class where we're talking about speculative trades. And so straddles and strangles kind of fit into that mold that maybe they're not something you're going to do every day, but they're definitely something you want to take advantage of when the opportunity is there. Now, we're still in a little bit of earnings season. It hasn't quite wrapped up. And so we're here for a good time as far as that using that strategy. I am joined in the chat by Brent Morris. I'm glad Brent is here. He teaches another advanced options class, which he is on. Brent, I have to get this down right. I think you're on Thursdays now. Brent, go ahead, tell us when you teach that class. That used to have straddles and strangles in it, but we've kind of broken things out here a little bit. How did the trades go from last week? Did you guys follow along? We're going to take a look at them, see how they went, and answer some additional questions along the way. But let's go through our important disclosures first, and then we will get down to our business. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for education and informational purposes. Don't consider it a recommendation of any sort. We're going to be using the Paper Money software application. That is for educational purposes only, and I think it's a great tool for us to use, especially as we're practicing new strategies or a new set of rules or a new watch list, whatever it might be. Have that paper environment to practice in. Investing involves risk, including the loss of principal. There is risk associated with investing. Past performance is no guarantee of future results. Now, there is some upcoming events here. Might be a little tricky these days, given the disruption in flights out of different airports. You guys are probably aware of that, but if you can easily get to Anaheim, Houston, or Miami, I'm going to encourage you to do so. Anaheim is, of course, this weekend, so make your plans in advance to participate with these. All right, we didn't really want to go there. Let's head over to our Thinkorswim here. Kelly has put a question in here right off the bat. So let's do this. Get back over here. I want to read the question, and then as we look at maybe some examples, we'll talk about the answer to this question. Okay, I'm going to review it now because it may get lost in all the different chats that come through. So Kelly says, you know, when you're setting a stop above resistance or below support for the short options, like if you're doing a short strangle or short straddle, I get how you set the short option buyback order, which is fine, but the worry is what about market or order slippage? And so I think it's a valid concern, Kelly. Anytime we have an order sitting out there, say it's a stop loss order or any other type of order, in your case, you're talking about stops, typically it might be triggered on something, right? But we aren't guaranteed whatever that might be. So if we set it based on a stock price, we don't always know what that option is going to be worth at that time. So many times we'll put it in as a basically to let it trigger as a market order. As we set up one of our trades here today, I can't remember if this paper money has this ability or not, but if it does, I'll show you how we maybe could help try to contain that slippage, even though we can't totally control it. Okay, we will talk about that. As you have other questions, go ahead, chat those in. And if you have questions and you're just listening to this on the recording, go ahead, write your questions in the comment section, because we will want to, then I go back and review those so that you can get your questions answered as well. Now, I don't know if I mentioned this good enough, but Brent is here to maybe help answer some questions I can't quite get to in the course of the presentation. All right. In answer to the question of how many of you followed along with last week's trades, I'm curious to know how many of you did, okay? Because we've had a couple of trades every week we've been following up on. And sometimes they're big movers and sometimes they aren't, but we're trying to get stocks that are big movers. So somebody asked a question last week about, you know, is there an investing plan? Is there a set of rules that maybe we should look at when looking at straddles and strangles? So I put together some ideas here for us to review here today. And first thing I want to show to you is a resource, okay? A couple of resources. Where do you find stocks that are coming up in earnings? Well, sometimes they're just big in the news and you hear it all over the place, right? But not always is that going to be the case. If you go out to, and I'm going to head it, well, one, you can come over here to the, let's see, where did it go? The Market Watch, and then we want the calendar. You can use your calendar function to find stocks that are going through earnings. So you can see right now, I've got this set to, let's set this to, that's last week. Let's set this to this week, October, it's kind of weird, October 5th through 11th. No, we need to get down to November. Where is our November? There we go. November 9th through the 15th. It's basically where it's going to go. And so I only have earnings marked over here on the left. And then it's a little bit hard to see, but essentially in each of these days, if you see that blue circle with the, I don't know if it's a light bulb or whatever it might be in there, and an ideas kind of logo, then you can see off to the side how many earnings are showing up here. So if it's just a small number, then some of the ticker symbols can fit in here. But if there's a large number, like we've been having the last few weeks, then it'll have just what the number is. And so, for example, say go over here to Tuesday. Looks like here that number says 53 before the market opens, and then some during the market. And looks like maybe this one isn't showing any on the PM. I don't know if that's really the case or not. In any case, I typically am just going to highlight Tuesday, and then I'm going to be able to see going down here the different ticker symbols, and then over here to press release. If you wanted to get some details, you can click over there, okay? But that's one place to go for ideas. Now, another place, and you guys can get this on your X. If you follow Brent and I on X, I'm Connie Hill CS, Brent is Brent Moore CS. And there's something that comes out and gets posted out into our X account that you could sign up for, okay? So I'm going to show you this. And let me also show you one other thing. Where did it go? Got a couple different windows set up here. Let me take a look real quickly at this other one where my X account is. That's what I'm going to pull over here. Make sure it's going to show up. All right, it's not showing up real quickly. Okay, I'll share this address with you. Okay, it comes out every single day. You can see it says Schwab Market Update. Joe Mazzola heads this up, and I'm going to share this address with you out in the chat. Okay, now let me show you what it's going to give you. So it gives you kind of a little thing, maybe what's driving our markets today up here in the headline. And then as you come down here, it just kind of lists the prices of the indices and things, then 3 things to watch. And as I scroll down, it'll also tell you some stocks that are on the move. Some of them are already happening. Some of them might be waiting to happen. But as you go down a little bit further here, it's the Investors Week that I wanted to show you. And it'll list here stocks that are kind of sizable stocks, things that are in the news, a little bit bigger, sometimes, many times they're larger cap stocks, right? Some of the big names that we're familiar with. But sometimes you might have a name come up here that you're not as familiar with. But it'll lay out what the earnings are, what the government reports are, the economic reports, which I know have been a little bit scant lately. This is when they are typically going to release. I don't know what's going to happen with the shutdown, which of these is going to come out, which of them isn't going to come out, okay? But this can be really helpful for you to follow and keep track of, okay, what are some of the stocks coming up? Because this actually was the source that I used today to find some of the stocks that we're going to talk about that are going to be going through earnings. And so number one is it's a speculative trade, right? Probably, there might be some that might do this regularly through earnings, but it might not necessarily be your bread and butter strategy. Okay, there might be other strategies that you feel like are more high probability based or a probability you're comfortable with as opposed to more of a speculation trade. Okay, but this is, I'll show you our first example we're going to look at here is CoreWeave, CRWV. Now, it's actually a newer stock. It doesn't have a lot of history as far as going back and looking at the chart and seeing if there's big movement on it or not. So SRWV, CoreWeave, they're going to announce tonight. Okay. Oh, I didn't want that. I want to go back and show you. If I pull up a year chart, which usually I'll do for these stocks, go and see if they really have moved. This stock just started trading in March. So it hasn't really been around a full year. But you can see this is the first earnings date it went through, and it doesn't look like there was really that big of a move, right? This green candle to this red candle. Now let's look at the next one. Okay, this came after the market as well on this day. And so the day before, or the day they announced after the market closed, the stock was up here, and it gapped clear down here and continued to drop a couple of more days after that. So it did experience a pretty good move that second earnings they had. This is only going to be the third earnings. But this stock is a real volatile stock. If you notice down here, it started down there about $33. Got up in a super short period of time to 187. Okay, so this thing is a huge mover. I mean, even in that short period of time. Right now, it's down to what, about 104 right now. But you can see, yeah, it's had some decent movement along the way. So anytime you see stocks that really are moving quite a bit, like this one, could fall on the radar. Now, the thing that really kicked this in for me to say, yeah, let's possibly do this as one of our straddles or strangles here today, is this market maker move. Okay. And basically, this is what the market makers have priced into the at the money options for this stock for the event. Not all stocks have a market maker move. Not all stocks going through earnings are going to have a market maker move. Okay. It's only on selected stocks, typically those that are a little bit more well-known, widely traded, very liquid type stocks are going to have that in there. Okay. So that's a little bit about CoreWeave. So typically looking for big moves, it doesn't really have that, but right now it is pretty volatile. Liquid options. That's going to be another big criteria. We can have stocks that maybe have a big market maker move, but maybe they don't have a lot of options to work with to put out a trade. Maybe you go in there and you look and you're like, oh, nobody's really trading this too much. That could totally eliminate one of those from going on your watch list. Now, I've started to collect a straddles and strangles watch list here. And what I've done is I've gone through, I need to do this for last week, but I've been creating this watch list based on the stocks that have been making some really big moves this is just over this last quarter, okay? And there are more to go on that list, but I'm going to started creating it so that we could also use that as a source for when we're looking to identify some trades. All right, Mary Burns, let me see what your question is here. Can you address when we get the movement we are looking for, but the earnings announcements after hours, the morning opens and there seems to be a recovery, specifically referencing SMCI, which was one of our trades from last week. Tonight, CoreWeave's going to announce. And sometimes we get an initial reaction from the market, and sometimes they want to wait until the conference call. Like people are like, okay, but let's see what they say on the conference call before they decide to take action. And it's not guaranteed to be in that same spot the next day. Okay. It just isn't. And so you look at it once they announce, if it's the night before, great, kind of see what the initial reaction is. And then the next day, just go back and look at it before the market opens, see if it's in the same spot. These are speculative trades, as I mentioned, but they also are kind of time intensive and time sensitive, meaning you have to stay on top of it. You're possibly going to make decisions immediately after the news comes out and the market has its reaction. So you really do have to stay on top of it. When we review our trades here, we will talk about that change on SMCI. One thing that some of you may not have that I need to share with you is the market matrix move. Right, where did it go? Tried to put it up here where it was. There it is. I thought I moved it. Here it is. It's right on top. All right, so I'm going to copy this. Those of you that are in the chat, you can see that. And basically, what do? You take the URL, take my description off of there where it says MMM on the chart, start with the exclamation point, come up to setup, open shared items, and then just copy and paste that address in there. If I were trying to do it right now, I've got to get rid of the letters in front of it that said MMM on chart. And then what you're left with is just this little URL. Hit preview. I'm not going to import it because I don't need it again. I called mine MMM on the chart. You can go in and you can leave that name or call it something that you think you'll recognize better. Just remember what you call it so you can go back and find it again. All right. If you can't find it again, well, it really didn't help you to upload it, right? Because you need to know what it is so you can find it and use it. Then you can add it into your studies. So down here, market maker move is right there. So it puts this little label up there at the top telling us how much the market maker move is, dollars and percentages. And then it shows you visually over here on this right-hand side where you can see these lines. That's basically saying, okay, this is what's priced into the market maker move. This one, it's kind of, I'm going to say a little bit deceptive because it is a big move. In fact, it's going to be the biggest move we're going to look at. But you might look at this and go, well, let's not look that far apart. And I think it's because of the scale of the chart. In fact, it ran up to 187 and started at 33. So yeah, with this big, huge range, it doesn't look like it's that much, but it really is. If I come in and kind of just zoom in on the last few months, yeah, we can definitely see, all right, that is pretty wide. Now, anytime we share scripts, I need to remind you they're not guaranteed as to accuracy or timing. Thank you for that reminder as well. CSS, do I have a scan to get the watch list for the serious movers? I don't. I have not figured a scan out for that yet. And it'll change. It changes continually. It updates continually. Say a year ago, there were some stocks that were really big movers that really aren't that big of movers these days. Okay. Part of it has to do with the environment that we're in and what the hot stocks are right now, where there's a lot of trading, right? Trading activity. Let's see what the other questions you guys have, because you've got some good ones out here today. Can I talk about the whisper word impact just prior to earnings, especially on mega caps? The whisper word impact. Eric, I don't know if that's a reference to, sometimes there'll be like this, what they think that what the news is, and maybe it's not even news, speculation is of what the stock is going to do. It could happen, it might not happen. It's so hard to say. We all find out at once. Everybody gets to find out at once, except those that are creating the numbers, right, for the company, and they can't trade it, right? They're usually in a quiet period. So we all get to find out at once, but sometimes this is historical. Hey, has this stock moved before in the past? Oh, maybe it's going to move again. So if you want to give me more details on that, I'm happy to return back to that. Okay. Lindsay's happy we're doing that because that was one that you had looked at as well. AJ says, well, what you can do is, if a scan is pretty easy, just scan for stocks whose earnings are in X number of days. That's true, just to find the stocks that are in earnings. But as far as looking for criteria to be able to say, hey, did it move big at the last earnings? Haven't really found that exact kind of criteria to help us whittle down the list. But yeah, you can absolutely go in and say, stocks that are announcing earnings in the next number of days. Okay. Darius says the scan for the market maker move is found under stock. I think what you're talking about here is the stock filter, right? For that. So yes, I put the link for the market maker move in the chat. If I need to put that over, I can copy it again into the chat. Let's look at our first stock. And then those of you that are looking at, are kind of following this on the recording, what I'm going to do is I'm going to just put a text box here. Text box. I'm going to type that in there. And let me just move it in a spot on the chart that's kind of out of the way. But we'll put it up big so you can see it there as well. All right. I think we're up to date here on the charts, or on the questions in the chat. All right. CoreWeave, 12% now. Now it's up to 12%. That is a pretty big move. What would I consider a pretty big move? 12% or plus, definitely very big, okay? But a small move, I would say a 3%, 4%, 2%, I would probably categorize those as low, meaning not a lot of move expected from the stock. Therefore, it's not priced into the options. And for this strategy, straddles and strangles, to be successful, you need big moves. You just do. And if you don't get them, you could lose on both sides of the trade. You could lose on that long call and that long put, which is really not happy to have happen to you, okay? And so that's why we have to be looking for these big movers. Say something that's 5, 6, 7%, I'm going to call them about a medium mover, something people might consider doing for a big move. But then anything, say 8, 9+%, those are the ones I'm going to categorize as bigger. Okay. And so that's what in our trades that we've been doing, that's what I've really tried to focus on. Okay. So if we're looking for a criteria, big earnings in the past, typically lots of liquid options. And the third thing is this market maker move calculation. Okay. Those are the three right now. We don't have to have earnings exactly right this week. We could do it in advance if we wanted. We could purchase options, and we've done that in the past. We'll probably have to start getting into that again, just because of kind of how the earnings kind of filter along. All right, so CoreWeave, huge move is expected here. Now they announced tonight. So these options that expire Friday is where most of the implied volatility, or the biggest amount of implied volatility, is posted in these options, right? The ones that expire. So this 172% is huge. And then off to the side, you see a plus minus 15.65. This number is what the expected move is by options expiration day, either up or down that amount, 15 plus bucks. And so that number is a little bit different than the market maker move, because this is only for the event. Okay, this one goes all the way to options expiration on Friday. Now, some people might choose to do the November 14th. They don't want to buy as much time. They think they're going to be over in 2 days, so they don't want to necessarily go out. And that's valid, especially if it's something that it would announce tonight or say tomorrow morning. But as you're seeing those like on Wednesday, Thursday, Friday, if you need a little bit more time for the stock to make a move, for your trade to work out, you're kind of stuck in a box. You can't do that. So I was out looking out here on, say, the 28th initially, and there's a little bit of open interest, but not as much open interest as I really would want to see. And same thing if we go out here a little bit further, December 5th, we look at this open interest, there's just not a lot. And so sometimes the time that we select here might be dependent on where is there the open interest. Now, it's also true for strike prices and whether you're going to decide to do a strangle or a straddle. Okay. Core weave on this, let's see, that's changed a little bit here. Since I looked at this initially, at the money was the 107s, and that's changed. It looks like it's a 103 right now is where the stock is. So probably what 105 is going to be our at the money strike. That's going to be the closest one. And I was going to go a little bit out of the money. Okay, and do a strangle, simply because we have the open interest to do so. All right, I was going to go a couple of strikes out of the money. So now that this has moved a little bit, that's going to change. So we're going to do this. If it's at 103 on the put, we're going to do the 100. So that's going to be the next strike out of the money. And let's go ahead and grab it. And then on the call side, if 105 is our strike price here at the money, then our 110 is going to be our strike price. So that's what we have. Sometimes it's nice if the premium on the put and the call are closer together, but it doesn't always work out that way. Okay, so there's our call, there's our put. And because they're out of the money, each of these, that's going to be a strangle as opposed to a straddle. When we're going to do a straddle would be at the 105s. Okay. If I said the word always, you're right. Always is never a word I can use. John says, do stocks start getting a little jittery right before earnings start? Stocks have a tendency to increase in implied volatility maybe a week or two before they announce earnings. So let's change our study here and let's bring in our implied volatility. IMP volatility. Let's actually move that up. And let's let's hide the relative strength. Let this one have that space. And let's make this a little bit wider. Okay. Did I not get that all the way? Implied volatility, it's down there. Okay, it needs its own spot. Okay, there we go. It was lumping it in there with the volume. We don't want it in with the volume. We want it to have its own pane. Okay, so we can see here it has kind of been gradually creeping up. Now, again, it doesn't look like a whole lot until we move in, until we zoom in on it, and we can see, oh, okay, yeah, there is a steady climb of implied volatility right now at 1.07, which is pretty high. Okay. All right, so yeah, typically that may happen. Okay, we're going to go ahead and what do we need to expect out of a stock? Well, if it's going to cost us about close to $14, and we're kind of thinking about our break even, what we hope is that one side's a loser and we can close it down really quick. Okay, in the morning when the market opens, hopefully it moves to one side or the other and we can see that. And then we hold on to the other side. We salvage what we can out of the one that we think is the loser. Okay, and what do we need to do? We kind of need to make up about 14 bucks. Okay, so you might look at this and go, well, this is $13.95, but the market maker move is only $12.90, and that is true. And basically, that's going to be the straddle. We were to go back and add up the 105 on the call and the put because it's the at the money, it's going to be pretty close to that market maker move. Okay, so it's a big number as well, but remember we went a little bit out of the money on that one. Okay, we're going to go ahead, we're going to submit this. We're going to hit confirm and send. Let's put it in our straddles and strangles grouping. I'm going to send that on. Okay. Oh, the conditional order. I forgot to do the conditional order. Okay, let me do that real quick. Let's do this and this again. Let's see. It's the 100 put, 110 call. Oh, I'm holding down the wrong key. That's why it didn't go on. Okay, let's try this again. 110 on the call, 100 on the put. And then what you might consider doing is instead of doing these both together, maybe put them as separate trades. In fact, let's do that. Let's go to show you how this might work. I'm going to do a blast order, which means we're going to put both of them up together. Okay, here's our put, here's our call. I apologize. Out of habit, I hit my control key to bring him in, and I really delete that one. Okay, so one more time. Call, blast all, or put. Now we'll do the call. Then we can put in individual orders, exit orders, on each strike price. And I think this is what the question was at the beginning of the session was, well, how do we deal with that? So let's suppose on the put, let's suppose you decide, hey, if it goes against us by 50%, or if it goes to X price on the price of the stock, that we want to get out, okay? So if the stock's at 104, and let's say on the put, say it jumps up to 106, that might be a decent indicator that, okay, the put is not going to be the trade we're going to go with. So you might want to put a stop on it. So as we come over here, we click on the gear, bring up the box, and we'll just use that 106 as our, what we're considering here. And let's put it based on the mark price, the difference between the bid and the ask. And then we're going to say if the price of the stock gets greater than 106, let's make sure I've got my arrow going the right way. If this order security is less than, we want to change it to greater than 106. Then what? Well, the then what is up here on the top. Is it going to be 710? We don't know that it's going to be 710, do we? Yeah, we really don't. So instead of a limit order, we're going to put on a market order. And this is where the concern and the question comes in is we don't always know what this price is going to be. But what we can do, we'll make that GTC. And like I said, I wasn't sure if this paper money had this available. This one doesn't. But what we can do is we can say we want it to be, I wish it was on the screen so I could remember exactly what it is. Let's change it to limit. This is it. This is what it is. Back to the limit order, even though we know it might trigger a market order. And what we're going to say is base the limit price on what? Base the limit price on the last price. Base the limit price on the bid price. Now, since we would be wanting to sell at that time, what we can do is we can say, yeah, make it according to whatever the bid price is versus a market order, right? So it'll put it in as a limit order based on how we set this up. And then this offset is if you wanted to say plus or minus a certain amount from the bid price. So suppose I put in here 10 cents, okay? That would mean take the bid price, add 10 cents to it, put that in as my limit order, okay? That's a little bit more difficult to get filled that way. And so what some traders might do is just leave it alone and say, just put it in for the bid price, right? You're feeling okay. It's something that's liquid. Put it in based on the bid price. Don't put an offset here. And then it can go in as a limit order. So that's what I meant by, maybe we can help facilitate a better price, even though it's not guaranteed, by using this little setup. Any questions on that? Have any of you been using that? I'm curious. Go ahead. You can answer in the chat. I know it'll take just a minute. I'll be looking for those questions. All right. We're not going to do our order that way, although we could. Okay, you certainly could. Just because I haven't taken the time to go out and kind of figure it all out, I want to use our time for some additional things. Okay, hopefully that helps. All right. Okay, PL Anderson says you haven't been using it, but you've seen Rachel use it. Yeah, it's really helpful tool to be able to use. Let's take a detour. Actually, let's not take a detour. We're going to do our second trade. We're going to do it really quickly, though. Okay. Another stock that's coming up right now for earnings is going to be on the 11th, which is tomorrow. After the close is when they announce Oklo. Now, Oklo was not that big of a mover earlier in the year, or maybe even a year ago, but more recently, it has been a pretty big mover. Look at the price here, you guys. This is a year chart, right? It was at $17, ran up all the way to $193. Really is pulling back. I mean, quite a bit off that high. I mean, almost 100 points off of that high is how much it pulled back here recently. This thing is incredibly volatile. Okay. Our market maker move here is 9.57%. So I'm going to put that in the larger category, and we can see where the lines are right here for this one. All right, let's see what the current strike would be. That's closer. Okay, 109. 109 is our at the money strike price, and it's nice that we have single digit increments. You can see here that the 110 has a ton of liquidity. Okay. Earlier today that was the at the money price, and I was thinking of doing the straddle because of that nice open interest here. The prices moved a little bit. So on this one, the spread is a little bit wider than what I would like here. 15, a buck and a quarter is what the spread is here on this 109. So we're going to want to get filled at a midpoint price. See if, then the spread isn't quite so much to have to overcome. And let's go ahead. 105 is all right. What's this? 139. We're only going to do one contract on these, right? And so we just want to make sure that we're not playing with something that has 42 or 27 or 51. Okay, with something hopefully a little bit bigger than that. Let's see. Well, let's go with the 110s. Okay. It's going to be the out of the money here, but there just isn't decent open interest. So let's do 110 here, and I am going to hold down the control key. And then on this side, we can do the 109, but that's going to be our kind of our at the money. Let's go ahead here. Let's go 108. Okay, so we're going to do 110 on the call side, 108 on the put side. Both of those would be considered out of the money. So technically here we've got a strangle. We've got a pretty expensive strangle. Okay. One thing I'd point out here is the ones that expire Friday, 170% implied volatility priced in. These 146. So they are really expensive. So we really do need to have a big move here. Okay, we're going to put those in our bucket. I'm going to manually watch them like a hawk tomorrow. And well, the first one for tomorrow, and then this one they'll announce after the close. So that'll be Wednesday morning. We'll be watching those really close. All right. All right, we've got those two in. Let's talk about SMCI, one of our trades from last week. It had SMCI had a implied or a market maker move at the time before they announced earnings when we got in last Monday of 9.48% is what I had written down. That could have been before our class started. Okay, we went out a little bit. We did the November 21 options here as well, giving ourselves a little bit more time. And let's see what happened on the chart. And let's just kind of zoom in here on our 3 months. So we got in here a few days before they announced. Their earnings announcement was on the 4th after the market closed. So here's the 4th. Here's the close of the market where the stock was, had a drop, a drop, a drop. Okay. So on this day, when we knew which way it was kind of going, it was easy to say, oh, are we going to hold on to the put or get rid of or hold on to the call? And since it drops fairly significantly, it's okay. Let's see what we can salvage out of the call. And then let's go hold on to the put. And it kept dropping each day here. Now, last Friday, it put in this candle. Some of you might recognize that. That's a hammerish looking candle, okay? Which means potential reversal. Some people might want to wait to actually see if it really reverses the next day. They might want confirmation of that. I would say especially if it goes over a weekend, a trader might be considering that. Now, earlier today, this was actually a bullish candle. Right now, it's kind of a bearish candle. I mean, it's still up 23 cents, but it has dropped from where it opened here today. So earlier today, what we did, when I saw that bullish looking candle that looked like it was confirming the hammer, then we went and got out of that side today. Okay. So I have not run all the numbers yet. We're going to do that here together. So our net debit on this was $7.45. Our call that we got out of, we were all able to salvage a whole 39 cents out of it, which I know is not a lot. And on our calculator here, let's just run some quick math. Let's go 745 minus the 39 cents. So then that reduced our cost, excluding commissions, to 706. Okay. So that would mean, okay, in the mind is like, okay, let's do better than 706 to try to be able to be profitable on this trade. Like I said this morning, we sold the put. You can't see the date here, but here's today, 736. Looked like it was starting to show some strength, some follow through from that hammer. And so we went ahead and sold it. We got 970 out of it. So 970 minus 706 would give us a profit there in the range of what? About $2.64 per contract, which in this case we did 2. Okay. The idea with us doing 2 is if we had a one target for one and a second target for the other, didn't turn out that we really ended up using that or needing that. Okay. Going back to the comments, yes, the night they announced, if you were looking at the chart, we're going to have to maybe end on this thought here, is in the after hours, it did look different than how it opened up the next day. That is true. We go through here, there was you can see right up here, look at this, how high that ran up on that initial candle. You went racing up there and you might be thinking, oh, maybe good news, okay? But it didn't, it dropped. And then you can see then the next day it ran up again and then it fell, okay? All right, you guys, these trades, they take a little bit more time. You need to give them a little bit more attention. Then maybe you might on a different trade that doesn't need to be watched like a hawk as soon as they announce earnings, right? I mean, when we have earnings, it's good to be able to pay attention to those stocks. In this case, these strategies, they are a little bit labor intensive, okay? And sometimes it took a while for it to play out, right? SMCI, it kept dropping. Great. So we stayed in the trade. I didn't do this, but what you could do is ratchet up your stop loss if you wanted to. All right. Well, my time is up. All right. I did not see a survey out there today. But if you found this helpful, to go back and review these trades or this one and put on some new trades, go ahead, hit the like button. That'll let others know that you found this valuable and helpful in our session here today. You did have some good questions. I'm glad that we went through them. Kind of to summarize, we put on 2 new trades. Okay. We put on a strangle on both CrowdStrike. No, it wasn't CrowdStrike. It was similar initials, CRWV, CoreWeave, and on Oklo. So we're going to watch those this week, see how they fare. Do the same strategy if you want to practice along in your own paper money account and say you want to practice with some stocks, go ahead and do that. That's how you have questions. Brent and I would love your follow on X. Coming up next should be Barb Armstrong with getting or growing a smaller account or trading a smaller account. That's what it is. Trading a smaller account. That'll be right at the top of the hour. So we'll have a quick break. Be back at the top of the hour. Brent, thank you for your help answering questions. We had quite a few of them there today. You guys have a great day. I'll see you tomorrow.